Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. I want to go over some comments, some subscriber comments and questions. And, there's some really good comments here. And I'd like to make some comments that everybody listens to. And again, guys, this is just my financial opinion. I put a lot of thought in this. I've been very patient. I've seen this stuff with ratios over time. And a couple of comments here. It says, well, the entire market rallied in the afternoon, not only uranium. Would be more excited if it went up by itself alone. But we're seeing all these assets almost kind of like jumbled together. And it's just liquidity going in and out of the markets almost. And we're seeing it across all assets. So that there is this interconnectedness between all these different assets. And eventually, we can see it in the ratios too. I do think commodities will outperform and money's going to start to prefer those assets over the others with time. And I don't know how they're going to disconnect themselves from each other. And here's one that I really wanted to touch on. This is the one I really wanted to make the video on, but it says platinum got pummeled today. If it is so cheap, why the large downdraft days? And that's a really good question. Platinum did go down today, and it is cheap. And I think it could even head to the upper 800s, and it would still be within the pattern, so to speak. Just because something's cheap doesn't mean it has to move in any one direction. And it can remain cheap for a long time. And that is your opportunity cost, potentially. The thing is, platinum is an incredible metal. Its day in the sun is going to come, and it's going to come quite rapidly, and it's going to be a big, big move. I was searching all over the internet for I just read about oil and energy in general. And maybe I'll pull it up and kind of show you just kind of some of the things. I go to oilprice.com and I was just reading some things on here. And if we go to, I think it was under alternative energy, it came up on this it came up like in here. And I was just reading some of the stuff through here. And some of them were talking about hydrogen economies. And how the Middle East, a lot of these areas in the Middle East were trying to become these like gigantic producers of hydrogen, probably because they're in the desert, they can create solar, and through electrolysis, they can create these hydrogen economies. And there was a whole bunch of articles on hydrogen that I was reading, and I was just kind of reading all over the place. They're trying to put this stuff in over the next 4, 5, 6 years. From what I can gather, just by reading this, by looking who's doing what, and kind of what's going down, I kind of think that peak oil is upon us. And that's why some of these oil countries are getting so heavily interested in hydrogen and becoming these like mega factories of hydrogen for distribution worldwide of hydrogen. And they're putting them on a time frame which is pretty quick, like 4 or 5 years out. Now, if we go into this hydrogen economy, platinum's going to be used in fuel cells for hydrogen if we have these fuel cell hydrogen cars. And platinum's going to be used, obviously, in catalytic converters and whatnot, but platinum, if we try to ramp this hydrogen economy up, there just isn't that much of it. We also have a gap, a huge gap between the peak of 2006, which is peak platinum. Right now, we produce about 6 million ounces of platinum a year. We do about 8 million with recycling. So platinum, if it's used in the hydrogen economy, it's got huge demand out there. And I'm not basing everything off of hydrogen. Hydrogen's like icing on the cake. It's also going to substitute other metals like palladium. And it's already happening in China. It just hasn't been released yet. We're seeing China soak up copious amounts of platinum. And I don't think it's in the numbers yet. So we're at this transition stage of surpluses in platinum to potential deficits in platinum. And we're in that transition period. That's why we're breaking out to the upside of that big pattern. And right now is the time, is don't focus on price, focus on value. And platinum is by far the cheapest value. The price will come. You just have to be patient. I was buying in 2019. It was under It's like $850 an ounce, 800 something dollars an ounce. And I was buying into it. And then C19 came and it blew out to the downside. So rather than me worrying about the price, I was looking at it and saying, well, the ratio is off the chart now. Like, I bought a whole bunch more. So I guess the difference between maybe me and a lot of other people is I focus on the ratios. And I swear to you guys, if you've done this long enough, and you will get used to it if you continue to practice it, is every time you have a ratio that comes down, you won't know the necessary turning points. You won't know the necessary timing. If you can get close to the market conditions, that's that real estate housing term. If you can just get close to it, and you might be a couple years early or whatnot, the gains after are so large that you just, like, once you ride through one of these or two of these in a couple of different assets and you kind of work with it, you're going to know what to do. And it's just like, ratio's low, it's a cheap asset. The money will come back into that asset. And you're going to say, why would it come back in? Convince me why. Convince me why money's going to flow back into platinum. Well, when things get more expensive, people like me, engineers, and other people around the world who are going to create products or manufacturing, or they use materials in their products, what they're going to do is they're going to find cheap alternatives. And if your ratio is cheap against all other assets, that is the alternative. Does that make sense? So people are going to prefer the cheaper alternative, which would be that asset. Just like silver, just like any other asset out there. If you're going to buy cans of beans, what you're going to choose, what most people do, and maybe not everyone, but a lot of people do, is they're going to say, well, what's the cheapest per ounce that I can get? And you're going to get a bunch of value people going in there and buying what they think are some of the cheapest per ounce, or what's the best quality and the cheapest per ounce in combination. So they're going to look at quality and price. And some people don't care about price, and that's, maybe they care about other things like their time or whatever it is. But a lot of people, choose things that way. And if you're doing things in a corporation, you're going to choose most of the time the quality and value and price. There's going to be some intersection there. Platinum is an incredible metal. It's high melting point. It's got all the material characteristics of what I think are going to go into brand new kind of, we'll call it cutting edge designs, because of the properties of the material. And with the pricing of where it's at today, it's absolutely ridiculous in my opinion. And especially what's coming up ahead of us in terms of hydrogen economy. But if you want to research the hydrogen economy, look at how fast some of these are moving. It is incredibly fast how they're moving. Hyundai going into the hydrogen economy, Japan moving to a hydrogen economy, the Middle East. I mean, I think it was Qatar or someone that was going into hydrogen in a very big way. I can't remember the exact country. I think it was Qatar, but yeah, there's no way. Being cheap doesn't mean that the price of that asset has to go higher. It can still be very volatile. It can still be rolling around. Our goal is to get within like a year or two of a monster move, and you buy off the bottom and you accumulate the asset over the next couple of years. I've been accumulating platinum since 2019. And the ratio was incredibly cheap. It was cheap before that, but I didn't think the market conditions were close enough. Then I started seeing it, and I was like, "Oh, this could be going." So I better get in. So I started cost averaging in, and I've been cost averaging in ever since. And I'm fine with the price staying down for a little while because I'll continue to buy it. I've been buying platinum over silver, over gold, over almost everything, and I've been buying physical in a big way. And I saw oil go down in 2020, where the ratio went to 90. Bought the living heck out of it. And I bought it all the way down to 50, which was all the way up to September of 2020. October of 2020 is when I kind of stopped slowing down. November 2021 or 2020. And I bought uranium at the same time. I was swapping some assets from gold and silver over to that, not physical, but some of the companies, because the companies had a really good run after the 2020 pullback. And that's where I loaded in, rode that up, and then I swapped and put a lot of them into free rides and swapped over to oil and uranium. I got kind of lucky because I got the timing pretty right. I got it right, luckily. And I wanted to diversify out a little bit. So remember, it doesn't mean that a cheap ratio can't get cheaper. What it means is that if we're close to market conditions, now's the time to load in and just wait. And if you want to continue to cost average in, that's up to you, but that's what I would do. Can anyone shed light on why it went so wild today? It's like a snap of a finger, everything went up. Why? Well, the Fed came out, but it's really liquidity. Liquidity goes into these things, and uranium just doesn't have anything to really absorb it. So the only thing that absorbs liquidity in uranium is price. It's big price moves. So the price moves quite dramatically when any sort of liquidity comes running at it. So that's why this sector goes up and down so much, the volatility, because very little money leaving creates a huge price drop. Very little money coming in creates a huge price increase. And that goes for anything that's small in market cap with large liquidity moving around. And we have liquidity all over the place. Someone said a 1 ounce platinum Valcambi bars are under $1,000 in SD bullion today. That is an incredibly good deal. I bought the majority of my stack under $1,000. I was buying at like 920, 930. I bought a whole bunch at like 800, 830. And I'm talking, I got good stuff. I bought American Eagles for like $800 and something dollars, $800, $820. I bought a whole bunch of that back then. And then I bought a monster box of Maple Leafs for $8,000. It was like 8,200 or something. That was a steal at the bottom of 2020. And here's another thing that was really, I got really mad here. So I actually bought two from different companies. And then it immediately went away. It was eBay, if you want to know. One of them retracted it. And I thought that was it got me really mad. They sold it, and they sold a couple, and they said, oh, we had a inventory problem. These don't really exist, as the price was rocketing higher. They didn't ship it out. I paid it right there, right then, that day, and they never shipped it out, and they refunded me my money, and they said it was an inventory glitch. Man, that made me mad. Looking at this, holding long-term cost average and accumulate. That's all you got to do, guys. That's all you got to do. There will be an event that prevents the Fed from raising rates at the promised clip. They will use said event to implement NIRP and QE7. You're probably right. They always do this. Toll Brothers is another home builder. TOL. Yep. They're pretty good. Going down here, just looking down. Powell said in his press conference today that a successful cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk. It's like they're predicting this, like they're going to do it. Maybe you guys should write that down, put it somewhere like on a sticky note on your computer, and see if that actually happens. Sometimes it's like they set these things up in advance, and then all of a sudden you'll like read these things and you're like, wait a minute, is that tied with something else? And then it probably is. But a successful cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk. The Fed confirmed inflation is real and yet extended any meaningful response. Commodities should accordingly react to the upside. Already seeing oil climb. I agree. And I did another clip. It deals with currencies. And a lot of these assets move based off of the value of currencies. So we're looking at things, and when I say inflation, these things go up with inflation. It's the currency that's getting debased, and then money flows, liquidity flows into it. It's not necessarily a supply-demand thing, even though it could be. It's very heavily liquidity driven. And liquidity moving around is really what we want to watch, because that is the conditions that set up these big, huge super cycles. And I know everyone focuses on the supply and demand, but they don't focus on inflation. They don't focus on the value of the currency. They don't focus on commodities being priced in dollars. if the dollar drops, and I can't tell you when this is going to happen, there's so many things going on in the market in the world right now. But I can tell you that when you position here and we have all this inflation coming, people are going to start running. They're going to start running to things that are safer in terms of investments, and they're going to start losing money if those interest rates go up. If interest rates go up, guys, you're going to see a flood of money start coming at precious metals. It's going to be epic. And they're going to try to control rates. The problem is the pressure is going to build, and it's going to build and build and build. And at some point, they're going to say, we can't hold this down any longer. We have to rotate our position in terms of holding rates down. So I think that you got to position first, and then you just wait. The inflation's brewing. It's already out there. Now we just wait for rates to go up, and when rates go up, it's going to be so game on for us. We're going to be like high-fiving. We're going to be like, way to call this, way to get in there, way to do nothing with your investments and just sit there before everyone else comes. I mean, that's all it is. You're just getting there first and waiting for other people to show up later. You're at the party first. It's kind of boring at first. I guess it's maybe pretty volatile, but you get your pick of whatever you want at the party, so that's good. I hope all is having a good week so far. Are we going questions? I have one about what you think about banks such as Bank of America and JP Morgan shorting millions of paper contracts, dumping paper, silver, and gold on the markets to keep them low. I don't think that they are controlling it on a long-term perspective. I think they're controlling it in short-term bursts. So I think when options contracts and paper stuff comes due, they push things one way or the other, which is favorable for them. That's what I think they're doing, so that the contracts expire worthless that they wrote. I don't think that the overall price is being held low or high based off of that. I don't think the manipulation's long-term. I think it's short-term. And the reason I say that is we don't have shortages of these metals, and almost every market bounces between the cost curves of the high-cost producers that goes below a little bit below that, all the way up to whatever demand can take. So it's whatever demand can take and whatever the cost curve's at. It bounces between those two things. Whatever the demand can take is usually your ratio. That's your ratio of like platinum to gold ratio. So that is usually 2. So at one point, people, and that what that ratio is telling us is that psychologically people can go up to about a 2, a little bit over a 2.5 ratio of 1 ounce of platinum to 2.5 ounces of gold. So if gold's at $2,000, the market cap on platinum, given the historical kind of psychological top, would be $4,000 to $5,000 of platinum roughly. If gold's at 2,000, that's your 2.5 ratio. So that's kind of what that is, and I don't think that the manipulation can last forever. I think it's only going to be short term. Pressure builds, and then they get overwhelmed, and they're going to have to switch their positions from short to long. That's probably my guess. It's coming down here. Some people are buying some more stuff. Good for you guys. One thing that I'm really happy to read. I was reading over here, and some people were saying that they bought in. They cost average in. They're all about the thesis of the channel, and that they're focusing in on real estate and that going forward, and the market conditions and the valuations, and one even commented that it's just this long plane ride, which I commented on. It's like you have to go through this like it's a really, really long plane ride. And sometimes like you don't want to be on the plane, but you have to be on it. You're just sitting on it. And in order to get to the riches, in order to get to the vacation, in order to get to retirement, you have to take this long plane ride. And sometimes you're not happy being on the plane. You're just sitting there and you're like, this is so boring. This is so bad. You know, you don't want to be on it. And in order to get where you want to be, in order to get financial freedom, in order to get whatever, you got to take that long plane ride. And we are very early in our investments here in terms of valuations. And we're going to ride through a whole bunch of stuff. We are nowhere near a blow-off top. Blow-off tops come at the end. That's where it's going to be incredibly difficult because your account values are going to go up so fast and so radically that you're going to be like, should I sell? Should I sell? Should I sell? Should I sell? And the best thing you can do is cost average out and go really slow. You can see the ratios compress. And sometimes what's really difficult, and I don't have a great answer for everybody here, but usually if you can tie it to real estate, the ratios can compress all the way down and then they bounce off of it a couple times. That's really hard to read on a at the end of a bull market because they're going to have these things where they kind of come up and they come up and they're very volatile. At that point, we should be up very well in our accounts, and it's going to be very difficult to time that exact top. I'll be 100% honest there. It's going to be really difficult. So right now we are nowhere near tops. Our ratios are all cheap as heck. Oil's cheap, gold's cheap, silver's cheap, platinum's ridiculously cheap, uranium's cheap, everything's cheap. So I don't think we're anywhere near a top. And the top will come when real estate housing starts to decline, and our ratios are expensive, and we just have to wait. It's a long plane ride. If you wait on that long plane ride, it's going to be a very nice vacation after it. It's going to be very nice retirement or vacation or whatever you need the money for. And you don't have to leverage up too much, guys. You don't need borrowed money. You don't need any of that stuff. Just go to work hard, save your money, and buy some of these companies. Diversify out. You don't have to put it all in one. Don't do that. And then just sit in them and wait. You're going to see times where we're going to pull back. Conditions, valuations. Keep looking at those two and ride it higher. That's the way to make a lot of money. And I'll be completely honest, guys. We have all of this information and all this data at our fingertips. I would say I have never been as prepared as I am today. And it wouldn't have happened without this, all this information that I could gather so quickly. So it's all at your fingertips, just like mine. Now you have to work on yourself and be able to ride this stuff higher. Remember, don't focus on price, focus on value. Chase value wherever you can. The price will come. And I know some of you guys who have maybe invested recently in these markets. It's hard to see some losses. Maybe you got in, a little bit towards the peak or whatever, but they're all still of good value. So I would say continue to, in my opinion, I'm cost averaging in continually. I did buy at some of the really good lows in 2020. I got lucky. All right. And what happens with luck is if you stay on the channel and you learn these things inside and out, your luck will change. You will identify bottoms. You will identify things with technical analysis. You will identify all this stuff. And what happens is you're going to get these alignments that are super rare. They don't come often. And whenever you have those alignments, you have to literally capitalize on it. You have to take that opportunity and seize it. And you have to follow the strategies that the channel has set up. Position sizing for certain companies. Physical metals, look at the ratios, make sure they're cheap, get the technical analysis on, just cost average it, in my opinion. That's what I've done. It has worked incredibly well. And remember, I was buying palladium back in the day, and I had to ride through a long time. I sold it 20 years later. No, a little less than that, 15 years. 15, 11, 10, something like that. I bought some in 2009 at the bottom. I bought some before that. I think it was 04 or 05 or whatever it is. And I held all the way till 2020. So 15 years, 16 years, and 12, 11 years, something like that. And I bought not a huge amount because I didn't know exactly what I was doing. But now that you guys are on this channel, you know exactly what to do. And in my opinion, and platinum is cheap. Like I'm loading in, guys. That's my opinion. I'm buying the living heck out of it. Physical platinum. And I own a lot of physical silver. I bought that in 2018, 2020, and some in between. Whatever deals I could find, I bought it. And I didn't pass it up. So I'm riding the silver and platinum train big time with a little bit of gold. And then the companies, I'm big in energy companies. And some of these metals, I'm getting royalty companies in, kind of loading in. Copper, nickel. I think it's coming. It's coming, guys. You just got to be patient. Guys, like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.